Question 1. Compliance review shows that a FirstGroup bus operating on a key commuter route has reported a suspected brake malfunction by the driver. The operations manager is under pressure to maintain service schedules and suggests continuing the route, while a mobile mechanic is dispatched to assess and potentially fix the issue en route. Which approach best upholds regulatory compliance and professional responsibility for FirstGroup? Option A. Initiate a repair request for the mechanic and continue the route as normal, with the understanding that the mechanic will address the issue at the next scheduled stop. Option B. Allow the bus to continue its route with the driver reporting the issue, while a mechanic is en route to assess and repair it on the road to minimize service disruption. Option C. Immediately halt the bus's operation and ensure it is safely moved to a designated area for inspection and repair by qualified personnel before any further service is considered. Option D. Proceed with the route, but instruct the driver to operate at a reduced speed and with increased caution until the mechanic can reach the bus. Correct answer is C. Immediately halt the bus's operation and ensure it is safely moved to a designated area for inspection and repair by qualified personnel before any further service is considered. Explanation. Scenario analysis. This scenario presents a professional challenge for FirstGroup employees by requiring them to navigate potential conflicts between operational efficiency and regulatory compliance. The core difficulty lies in balancing the immediate need to maintain service schedules with the absolute requirement to adhere to safety regulations. A failure to correctly interpret and apply these regulations can lead to significant safety risks, regulatory penalties, and damage to FirstGroup's reputation. Careful judgment is required to ensure that operational pressures do not override safety protocols. Correct approach analysis. The correct approach involves prioritizing the immediate cessation of operations in the affected area until the safety issue is fully resolved and verified by competent personnel. This aligns with the fundamental principle of safety first, which is paramount in the transportation sector. Specifically, under UK regulations governing public transport operations, the safety of passengers and the public is the overriding concern. Any identified defect or hazard that compromises safety must be addressed before operations can resume. This approach ensures compliance with the overarching duty of care FirstGroup owes to its passengers and the public, as well as specific regulatory requirements that mandate the immediate reporting and rectification of safety concerns. Incorrect approaches analysis. Proceeding with operations after a reported safety concern, even with a promise of immediate repair, represents a critical regulatory and ethical failure. This approach disregards the precautionary principle, which dictates that where there are threats of serious or irreversible damage, lack of full scientific certainty shall not be used as a reason for postponing cost-effective measures to prevent environmental degradation or, in this context, safety incidents. It violates the duty of care and could lead to severe consequences, including accidents, injuries, and significant legal and financial penalties for FirstGroup. Attempting to resolve the issue without involving qualified maintenance personnel or regulatory oversight is also a failure. This bypasses established safety procedures and the expertise required to accurately assess and rectify safety defects. It undermines the integrity of the safety management system and exposes FirstGroup to risks of noncompliance with specific maintenance and inspection regulations. Delaying the decision until a formal complaint is received is a reactive and unacceptable approach. Regulatory frameworks, particularly in the UK, emphasize proactive safety management. Waiting for a complaint means that a potential safety hazard has already been present during operation, which is a failure to meet the expected standards of diligence and safety oversight. Professional reasoning. Professionals at FirstGroup should adopt a decision-making process that begins with a clear understanding of the regulatory framework governing their operations, particularly concerning safety. When a potential safety issue is identified, the immediate priority must be to halt operations in the affected area. This should be followed by a thorough assessment by qualified personnel. Communication with relevant authorities or internal safety departments should be prompt. The decision to resume operations should only be made after the safety concern has been definitively resolved and verified, ensuring full compliance with all applicable regulations and internal safety policies. This proactive and safety-centric approach is crucial for maintaining operational integrity and public trust. Question 2. Compliance review shows that a FirstGroup bus driver has identified a minor rattling noise from the engine compartment during their pre-service check. The driver is concerned this might indicate a potential issue, but the vehicle otherwise appears to be in good working order, and the noise is not significantly impacting performance. The driver is aware that deviating from the schedule could cause passenger inconvenience and operational disruption for FirstGroup. Option A. Immediately report the noise to the maintenance team and await their assessment before proceeding with the service, even if it causes a delay. Option B. Conduct a quick visual inspection of the engine compartment, and if no obvious problem is seen, proceed with the service. Option C. Note the noise in the logbook for a future inspection and proceed with the scheduled service. Option D. Continue with the scheduled service, assuming the noise is insignificant and will not pose a safety risk. The correct answer is A. Immediately report the noise to the maintenance team and await their assessment before proceeding with the service, even if it causes a delay. Explanation. Scenario analysis. This scenario presents a professional challenge for FirstGroup employees by requiring them to navigate potential conflicts between operational efficiency and regulatory compliance. The core difficulty lies in balancing the immediate need to maintain service schedules with the imperative to adhere to safety regulations, particularly when faced with time pressures and the potential for service disruption. Careful judgment is required to ensure that safety is never compromised for expediency. Correct approach analysis. The correct approach involves prioritizing immediate safety checks and reporting any defects, even if it means a temporary delay in service. This aligns with the fundamental principles of transport safety regulations, which place an absolute premium on ensuring vehicles are in a safe operating condition before commencing or continuing a journey. For FirstGroup, this would be underpinned by internal policies and procedures that mandate such checks and reporting, as well as broader regulatory frameworks governing public transport safety in the UK. Ethical imperative to protect passengers and the public from harm is paramount. Incorrect approaches analysis. An approach that involves overlooking minor defects to maintain the schedule fails to uphold the primary duty of care to passengers and the public. This directly contravenes safety regulations that require all identified defects to be addressed before a vehicle is deemed fit for service. Such an action could lead to serious accidents, regulatory penalties, and severe reputational damage for FirstGroup. Another incorrect approach, which is to assume a defect is minor without proper assessment or reporting, is equally problematic. This bypasses established safety protocols and relies on subjective judgment, which is not a substitute for objective inspection and reporting by qualified personnel. It creates a risk of underestimating the severity of a defect, potentially leading to a catastrophic failure. Finally, an approach that defers reporting a defect until after the route is completed, even if the vehicle appears to be operating, is a clear violation of safety procedures. This delays necessary maintenance and inspection, increasing the risk of a breakdown or accident during operation. It also undermines the proactive safety culture that FirstGroup and regulatory bodies strive to maintain. Professional reasoning. Professionals at FirstGroup should adopt a decision-making process that begins with a clear understanding of their safety responsibilities. When a potential defect is identified, the immediate step is to halt operations or prevent the vehicle from entering service until a thorough inspection and necessary repairs are completed. This involves consulting the company's operational manuals and relevant safety legislation. If there is any doubt about the safety of the vehicle, the default decision must always be to err on the side of caution and prioritize safety over schedule adherence. Escalation to a supervisor or maintenance team should be the next step if the employee is not authorized to make the final safety determination. Question 3. Compliance review shows that FirstGroup's internal audit team has identified potential inconsistencies in the application of accounting standards related to revenue recognition across different operating divisions. The team is considering how to address these findings to ensure full compliance with the relevant financial reporting regulations. Option A. Focus only on the largest divisions, as inconsistencies in smaller divisions are unlikely to have a material impact on FirstGroup's overall financial statements. Option B. Rely on the judgment of the senior finance manager in each division to interpret and apply the accounting standards, assuming they have sufficient expertise. Option C. Implement a standardized accounting policy for revenue recognition across all FirstGroup divisions, supported by detailed documentation and training for relevant personnel. Option D. Defer addressing the inconsistencies until the next scheduled external audit, assuming the external auditors will identify and rectify any material issues. The correct answer is C. Implement a standardized accounting policy for revenue recognition across all FirstGroup divisions, supported by detailed documentation and training for relevant personnel. Explanation. This scenario presents a professional challenge because FirstGroup, as a publicly traded company, must adhere to stringent regulatory requirements regarding financial reporting and disclosure. The challenge lies in interpreting and applying these regulations accurately to ensure compliance and maintain investor confidence. A nuanced understanding of the regulatory framework is crucial to avoid misstatements or omissions that could lead to significant penalties and reputational damage. The correct approach involves a thorough and documented review of FirstGroup's internal policies and procedures against the specific requirements of the relevant regulatory framework. This ensures that any identified discrepancies are addressed systematically and in accordance with legal and ethical obligations. This approach is correct because it prioritizes accuracy, transparency, and adherence to the law, which are fundamental principles of financial regulation and corporate governance. It demonstrates due diligence and a commitment to maintaining the integrity of financial reporting, thereby protecting stakeholders and the company's reputation. An incorrect approach that relies solely on the opinion of a single, unqualified individual is professionally unacceptable. This fails to establish a robust compliance framework and introduces a high risk of error due to the absence of a structured review process and independent verification. It bypasses established procedures for ensuring accuracy and adherence to regulatory standards. Another incorrect approach that involves overlooking minor discrepancies because they are perceived as insignificant is also professionally unacceptable. Regulatory frameworks often have specific thresholds and requirements for disclosure, and even seemingly minor issues can have material implications or indicate systemic control weaknesses. This approach demonstrates a lack of diligence and a disregard for the comprehensive nature of regulatory compliance, potentially leading to more significant problems down the line. The professional decision-making process for similar situations should involve a systematic and documented approach. This includes identifying the relevant regulatory requirements, understanding the specific context of the company's operations, conducting a comprehensive review of internal controls and procedures, seeking expert advice when necessary, and implementing corrective actions with clear accountability. Professionals should always err on the side of caution and ensure that all regulatory obligations are met with the highest degree of accuracy and integrity. Question 4. Quality control measures reveal that FirstGroup has identified a significant operational issue that could materially impact its financial performance in the upcoming reporting period. The internal team is still gathering all the necessary details to fully quantify the financial implications and assess the precise nature of the impact. What is the most appropriate immediate course of action for FirstGroup, considering its obligations under UK financial regulations? Option A. Immediately issue a public announcement detailing the operational issue and its potential financial impact, even if the exact figures are not yet finalized. Option B. Conduct a thorough internal review to verify all facts, quantify the financial implications as accurately as possible, and assess whether the information constitutes inside information, requiring immediate disclosure, or if legitimate grounds for delayed disclosure exist. Option C. Rely solely on external legal counsel to determine the disclosure requirements, without undertaking any internal verification or assessment of the information's materiality. Option D. Delay disclosure of the operational issue indefinitely until the situation is fully resolved and all financial impacts are definitively known, without any internal assessment of disclosure obligations. The correct answer is A. Immediately issue a public announcement detailing the operational issue and its potential financial impact, even if the exact figures are not yet finalized. Explanation. This scenario presents a professional challenge because FirstGroup, as a publicly listed company, must adhere to stringent regulatory requirements regarding financial reporting and disclosure. The challenge lies in balancing the need for timely and accurate reporting with the potential for misinterpretation or premature disclosure of sensitive information. Careful judgment is required to ensure compliance with the UK Financial Conduct Authority FCA, listing rules, and the UK Corporate Governance Code, which mandate transparency and prevent market abuse. The correct approach involves a thorough internal review process that prioritizes accuracy and completeness before any public announcement. This ensures that all relevant information is verified and that the disclosure is made in a manner that is not misleading to investors. This aligns with the FCA's Market Abuse Regulation, MAR, which requires issuers to disclose inside information as soon as possible, but also allows for delayed disclosure under specific conditions to protect the company's legitimate interests, provided that confidentiality is maintained. The internal review process is crucial for determining if the information constitutes inside information and if the conditions for delayed disclosure are met. An incorrect approach that involves immediate public disclosure without proper verification risks disseminating incomplete or inaccurate information, which could lead to market confusion and potential regulatory sanctions for misleading the market. This would violate the principle of providing accurate and non-misleading information to investors, a cornerstone of both the FCA listing rules and MAR. Another incorrect approach, which is to withhold information indefinitely without a legitimate basis for delay, would contravene the FCA's MAR requirement to disclose inside information promptly. This could be interpreted as an attempt to manipulate the market or gain an unfair advantage, leading to severe penalties. A further incorrect approach, which is to rely solely on external legal advice without conducting a robust internal assessment, overlooks the company's primary responsibility for ensuring the accuracy and completeness of its disclosures. While external advice is valuable, it should supplement, not replace, internal due diligence and understanding of the information's materiality and implications. Professionals should employ a decision-making framework that begins with a clear understanding of the relevant regulatory obligations. This involves identifying potential inside information, assessing its materiality, and determining the appropriate disclosure timing based on regulatory guidance. A structured internal review process involving relevant departments such as finance, legal, and investor relations is essential. This process should include verification of facts, assessment of potential market impact, and consideration of any legitimate grounds for delaying disclosure, all documented thoroughly. Question 5. The evaluation methodology shows that FirstGroup is considering a new service offering. During the internal review, it was identified that while the core service is beneficial, there's a potential for a minor, but not insignificant, operational disruption that could affect a small percentage of clients in the initial rollout phase. The team is debating how to communicate this to potential clients, which approach best aligns with the regulatory framework and ethical considerations for FirstGroup in the UK. Option A. Highlight the benefits of the new service and downplay the possibility of any disruption, assuming most clients will not experience issues. Option B. Focus on the internal operational procedures designed to prevent disruption, without explicitly stating the possibility of it occurring to clients. Option C. Proactively disclose the potential for minor operational disruption to all prospective clients, detailing the nature of the disruption and the mitigation steps FirstGroup is taking. Option D. Only mention the potential disruption if a client specifically asks about operational risks during the sales process. The correct answer is C. Proactively disclose the potential for minor operational disruption to all prospective clients, detailing the nature of the disruption and the mitigation steps FirstGroup is taking. Explanation. This scenario presents a professional challenge for a FirstGroup employee due to the inherent conflict between client expectations and regulatory compliance. The need to balance commercial objectives with the strict adherence to the UK regulatory framework governing financial services is paramount. A careful judgment is required to ensure that all actions taken by FirstGroup employees are not only commercially sound, but also fully compliant with the Financial Conduct Authority, FCA rules and relevant legislation. The correct approach involves prioritizing the disclosure of all material information to clients, even if it might negatively impact immediate commercial outcomes. This aligns with the FCA's principles of treating customers fairly, TCF, and acting with integrity. Specifically, Principle 1, Integrity, Principle 2, Skill, Care, and Diligence, and Principle 6, Customers' Interests of the FCA Handbook are directly engaged. By proactively informing clients about potential risks or adverse developments, FirstGroup demonstrates transparency and upholds its duty of care, thereby mitigating regulatory risk and fostering long-term client trust. An incorrect approach that prioritizes short-term commercial gains over full disclosure would constitute a breach of regulatory obligations. Failing to inform clients about adverse developments, even if not explicitly requested, violates the duty to act in the customer's best interests and with integrity. This could lead to regulatory sanctions, reputational damage, and potential legal action. Another incorrect approach that involves selectively disclosing information based on perceived client sophistication risks misinterpreting client needs and could still result in a failure to treat customers fairly, as all clients are entitled to receive relevant information to make informed decisions. Finally, an approach that relies solely on internal policies without considering the overarching regulatory requirements would be insufficient, as internal policies must be designed to ensure compliance with external regulations. Professionals at FirstGroup should employ a decision-making framework that begins with identifying all relevant regulatory obligations. This should be followed by an assessment of the potential impact of any decision on clients, considering both commercial and ethical dimensions. When a conflict arises, regulatory compliance and client interests must take precedence over short-term commercial advantages. Seeking guidance from compliance departments or legal counsel is crucial when in doubt. Question 6. Compliance review shows that FirstGroup has identified a significant operational issue that is likely to impact its financial performance in the upcoming reporting period. This information is not yet public. Which of the following approaches best ensures FirstGroup's compliance with UK regulatory frameworks and ethical standards? Option A. Immediately disclose the full details of the operational issue and its financial impact to the public via a press release. Option B. Delay public disclosure of the issue until the next scheduled financial report, citing the need to finalize internal assessments. Option C. Conduct a thorough internal review, consult with legal and compliance experts, and then make a timely and accurate public announcement of the material information as required by regulations. Option D. Inform a select group of key financial analysts about the issue and its potential impact before making a public announcement. The correct answer is A. Immediately disclose the full details of the operational issue and its financial impact to the public via a press release. Explanation. This scenario presents a professional challenge because FirstGroup, as a publicly listed company, must adhere to stringent regulatory requirements regarding financial reporting and disclosure. The challenge lies in interpreting and applying these regulations accurately to ensure compliance, particularly when dealing with potentially sensitive information that could impact investor confidence or market perception. Careful judgment is required to balance the need for transparency with the protection of proprietary information and the avoidance of market manipulation. The correct approach involves a thorough review of the relevant UK financial regulations and the company's internal policies on disclosure. This approach is professionally sound because it prioritizes adherence to legal and regulatory obligations. Specifically, it aligns with the principles of the UK Financial Conduct Authority, FCA Handbook, which mandates timely and accurate disclosure of inside information that could affect the price of securities. By seeking expert advice and conducting a comprehensive internal review, FirstGroup demonstrates a commitment to regulatory compliance and ethical conduct, thereby safeguarding its reputation and avoiding potential penalties. An incorrect approach that involves selectively disclosing information to a select group of analysts without a clear regulatory basis is professionally unacceptable. This could be construed as market abuse or insider dealing, violating the FCA's market abuse regulation, MAR. Such an action undermines market integrity and fairness, as it provides an unfair advantage to certain market participants. Another incorrect approach, which is to delay disclosure until a more convenient time without a valid regulatory reason, also constitutes a failure. MAR requires disclosure of inside information as soon as possible, postponing disclosure without a legitimate justification, such as the need to protect legitimate interests while preventing the premature disclosure of the information which would be prejudicial to the interests of FirstGroup, is a breach of regulatory duty. Finally, an approach that involves making a vague or misleading public statement to obscure the true nature of the information is also professionally unsound. This violates the principle of transparency and could lead to accusations of misrepresentation, further damaging investor trust and potentially triggering investigations by regulatory bodies. Professionals should employ a decision-making framework that begins with identifying the nature of the information and its potential impact. This should be followed by a rigorous assessment against applicable regulations, such as the FCA Handbook and MAR. Consulting with legal and compliance experts is crucial. Documentation of the decision-making process and the rationale behind any disclosure or non-disclosure decision is essential for demonstrating due diligence and accountability. Question 7. Compliance review shows that the marketing department at FirstGroup is preparing to launch a new promotional campaign for a recently developed investment product. The campaign materials have been drafted by the marketing team, who believe they accurately reflect the product's benefits. However, the materials have not yet been submitted to the FirstGroup compliance department for review. What is the most appropriate course of action to ensure adherence to regulatory requirements and protect client interests? Option A. Disseminate the promotional material immediately, as the marketing team has confirmed its accuracy and the product is ready for launch. Option B. Launch the promotion and request a compliance review of the materials after the campaign has been running for a week to gauge initial client response. Option C. Halt the dissemination of the promotional material and submit it to the FirstGroup compliance department for a thorough review before any client communication occurs. Option D. Proceed with the promotion but include a prominent disclaimer stating that the information is for general guidance only and does not constitute financial advice. The correct answer is A. Disseminate the promotional material immediately, as the marketing team has confirmed its accuracy and the product is ready for launch. Explanation. This scenario presents a professional challenge because it requires an individual to navigate potential conflicts of interest and ensure adherence to FirstGroup's internal policies and relevant regulatory frameworks, specifically those governing financial promotions and client advisory services within the UK. The core issue is balancing the desire to promote a new service with the absolute necessity of providing accurate, balanced, and compliant information to clients, avoiding any misleading statements or undue pressure. Careful judgment is required to ensure that client interests are prioritized and that all communications meet the high standards expected by the Financial Conduct Authority, FCA, and industry best practices. The correct approach involves a comprehensive review of the promotional material by the compliance department before dissemination. This is the most professionally sound method because it directly addresses the regulatory requirement for financial promotions to be fair, clear, and not misleading. The FCA Handbook, specifically CONC and COB sections, mandates that firms ensure their communications are appropriate for the intended audience and do not omit material information that could lead to a misunderstanding. A pre-dissemination review by compliance ensures that the material meets these stringent standards, mitigating the risk of regulatory breaches and reputational damage to FirstGroup. This approach prioritizes client protection and regulatory adherence above all else. An incorrect approach would be to proceed with the promotion without prior compliance approval, relying solely on the marketing team's assessment. This fails to acknowledge the regulatory oversight required for financial promotions. The FCA expects firms to have robust systems and controls in place to prevent non-compliant communications. This approach risks issuing misleading information, which could lead to client complaints, regulatory sanctions, and a loss of trust. Another incorrect approach would be to disseminate the material with a disclaimer stating that it is for informational purposes only and not financial advice. While disclaimers can be useful, they do not absolve FirstGroup of the responsibility to ensure the core promotional content is fair, clear, and not misleading. A disclaimer cannot rectify fundamental flaws in the promotional message itself and is unlikely to satisfy regulatory scrutiny if the underlying promotion is problematic. A further incorrect approach would be to only seek compliance review after the promotion has been launched. This is reactive rather than proactive and significantly increases the risk of regulatory breaches. If the promotion is found to be non-compliant, the damage to clients and FirstGroup's reputation may already have occurred, making remediation more difficult and costly. The professional decision-making process for similar situations should involve a clear understanding of the regulatory landscape, particularly the rules surrounding financial promotions and client communications. When developing new promotional materials, especially those related to financial services or products, the first step should always be to consult with and involve the compliance department early in the process. This ensures that potential issues are identified and addressed proactively, rather than reactively. Professionals should prioritize adherence to regulatory requirements and ethical obligations, recognizing that client trust and regulatory compliance are paramount to the long-term success of FirstGroup. Question 8. The monitoring system demonstrates a pattern of driver behavior within FirstGroup's fleet that deviates from the expected parameters for adherence to speed limits on designated routes. This deviation, while not yet confirmed as a direct violation, suggests a potential risk of non-compliance with road safety regulations. What is the most appropriate immediate course of action for the FirstGroup compliance officer? Option A. Initiate an immediate review of the specific driver records and route data flagged by the system, cross-referencing with the relevant UK road traffic legislation and FirstGroup's internal driving policy to determine if a breach has occurred, and if so, follow the established disciplinary and retraining procedures. Option B. Publicly issue a company-wide warning about the potential for disciplinary action for any driving behavior that deviates from expected parameters, without first investigating the specifics of the flagged data. Option C. Assume the monitoring system is malfunctioning and disregard the flagged deviations until further evidence of a problem emerges. Option D. Instruct all drivers to immediately cease any activity that might be flagged by the monitoring system, regardless of whether it constitutes a genuine violation, to avoid any potential regulatory scrutiny. The correct answer is A. Initiate an immediate review of the specific driver records and route data flagged by the system, cross-referencing with the relevant UK road traffic legislation and FirstGroup's internal driving policy to determine if a breach has occurred, and if so, follow the established disciplinary and retraining procedures. Explanation. This scenario presents a professional challenge because it requires an individual at FirstGroup to interpret and act upon data from a monitoring system that suggests potential non-compliance with regulatory requirements. The challenge lies in accurately identifying the nature of the deviation, understanding its implications under the relevant regulatory framework, and selecting the most appropriate course of action to ensure adherence to legal and ethical standards. Careful judgment is required to avoid overreacting to minor anomalies or, conversely, underestimating the significance of potential breaches. The correct approach involves a thorough review of the monitoring system's output against the specific regulatory framework applicable to FirstGroup's operations. This means understanding the exact requirements of the relevant legislation and guidelines, assessing whether the observed data truly indicates a breach, and then initiating the prescribed internal procedures for reporting and rectifying any identified non-compliance. This approach is correct because it prioritizes adherence to the law and internal policies, demonstrating a commitment to regulatory compliance and responsible corporate conduct. It ensures that any identified issues are addressed systematically and in accordance with established protocols, thereby mitigating risks to the company and its stakeholders. An incorrect approach would be to dismiss the monitoring system's output without proper investigation. This is ethically and regulatorily unsound, as it risks allowing non-compliance to persist, potentially leading to significant penalties, reputational damage, and harm to the public. Another incorrect approach would be to take immediate, drastic action based on incomplete information or a misunderstanding of the regulations. This could lead to unnecessary disruption, damage to employee morale, and could even create new compliance issues. A third incorrect approach might be to attempt to conceal or downplay the findings, which is a clear ethical and regulatory failure, constituting a breach of trust and potentially illegal activity. Professionals should employ a decision-making framework that begins with understanding the specific regulatory context. They should then objectively analyze the data presented by the monitoring system, comparing it directly to the requirements of that framework. If a potential non-compliance is identified, the next step is to follow established internal reporting and escalation procedures, seeking expert advice if necessary. The ultimate goal is to ensure that all actions taken are compliant, proportionate, and aimed at upholding the integrity of FirstGroup's operations and its commitment to regulatory standards. Question 9. The assessment process reveals that a candidate for a role at FirstGroup has a pre-existing professional acquaintance with one of the interviewers scheduled to conduct their evaluation. The candidate is aware of this connection and its potential to be perceived as a conflict of interest. Which of the following actions best upholds professional integrity and regulatory expectations for a fair hiring process at FirstGroup? Option A. Proceed with the interview as scheduled, hoping the interviewer will maintain objectivity and not mention the acquaintance. Option B. Proactively inform FirstGroup's Human Resources Department about the acquaintance and request guidance on how to proceed. Option C. Discreetly mention the acquaintance to the interviewer during the interview to acknowledge the connection. Option D. Withdraw from the assessment process without informing anyone at FirstGroup about the reason for withdrawal. The correct answer is B. Proactively inform FirstGroup's Human Resources Department about the acquaintance and request guidance on how to proceed. Explanation. This scenario presents a professional challenge for a candidate applying to FirstGroup, requiring them to demonstrate an understanding of ethical conduct and regulatory compliance within the context of a hiring assessment. The core of the challenge lies in navigating potential conflicts of interest and ensuring that personal relationships do not improperly influence professional judgment or create an unfair advantage. Careful judgment is required to uphold the integrity of the hiring process and FirstGroup's commitment to fair and transparent recruitment. The correct approach involves proactively disclosing the pre-existing professional relationship with the interviewer to the appropriate FirstGroup HR personnel. This demonstrates integrity, transparency, and a commitment to ethical recruitment practices. By informing HR, the candidate allows FirstGroup to manage any potential conflict of interest appropriately, which might involve assigning a different interviewer or implementing specific oversight measures. This aligns with general ethical principles of disclosure and conflict avoidance, and implicitly with regulatory expectations for fair employment practices, ensuring that all candidates are assessed on merit. An incorrect approach would be to proceed with the interview without disclosing the relationship. This failure to disclose creates a significant ethical lapse. It suggests a lack of transparency and potentially an attempt to leverage a personal connection, undermining the fairness of the assessment process. This could be seen as a breach of trust and a violation of FirstGroup's internal policies on recruitment and potentially broader employment law principles that mandate fair and unbiased hiring. Another incorrect approach would be to attempt to downplay or conceal the nature of the relationship during the interview. This is professionally unsound, as it compounds the initial failure to disclose with active deception. It not only violates ethical standards of honesty, but also risks severe repercussions if discovered, including immediate disqualification from the hiring process and damage to the candidate's professional reputation. A further incorrect approach would be to withdraw from the assessment process entirely without any communication. While this avoids the immediate conflict, it is an unproductive and unprofessional response. It fails to address the situation constructively and misses an opportunity to demonstrate ethical awareness and problem-solving skills. Professional decision-making in such situations involves proactive communication and seeking guidance, rather than avoidance. The professional decision-making process for similar situations should involve 1. Identifying the potential conflict of interest. 2. Understanding the relevant ethical guidelines and company policies, in this case, implied by the hiring assessment context. 3. Proactively and transparently communicating the situation to the appropriate authority, FirstGroup HR. 4. Cooperating with any steps taken by the company to manage the conflict. 5. Maintaining professionalism and integrity throughout the process. Question 10. Compliance review shows that a regional manager at FirstGroup is considering implementing a new driver scheduling system designed to increase route efficiency. However, there is a concern that the proposed system might inadvertently lead to drivers exceeding permitted driving hours under the relevant UK transport regulations. The manager is debating whether to proceed with the system based on its potential efficiency gains or to delay implementation pending a full regulatory assessment. Option A. Proceed with the new scheduling system, but only after informally discussing the potential issues with a senior driver who has extensive experience with scheduling. Option B. Halt the implementation of the new scheduling system and initiate a formal consultation process with FirstGroup's compliance department and legal team to conduct a comprehensive review of its adherence to UK driving hour regulations. Option C. Proceed with the new scheduling system immediately to realize efficiency benefits, assuming that minor adjustments can be made later if any regulatory issues arise. Option D. Implement the new scheduling system and instruct drivers to self-monitor their hours, trusting their professional judgment to stay within legal limits. The correct answer is C. Proceed with the new scheduling system immediately to realize efficiency benefits, assuming that minor adjustments can be made later if any regulatory issues arise. Explanation. This scenario presents a professional challenge because it requires an individual to navigate potentially conflicting priorities between operational efficiency and regulatory compliance within the specific context of FirstGroup's operation. The core of the challenge lies in ensuring that any proposed solution to an operational issue does not inadvertently create or exacerbate a compliance risk, particularly concerning the regulatory framework governing FirstGroup's activities. Careful judgment is required to balance the immediate needs of the business with the long-term imperative of adhering to all applicable laws and guidelines. The correct approach involves a thorough understanding of the relevant regulatory framework and its implications for operational decisions. This approach prioritizes identifying and mitigating compliance risks before implementing changes. Specifically, it requires a proactive stance of consulting with the compliance department and seeking their guidance on the regulatory acceptability of any proposed operational adjustments. This aligns with the ethical duty of care and the legal obligation to operate within the bounds of the law. The regulatory justification stems from the principle that all business activities must be conducted in a manner that is compliant with the governing regulations, which often mandate consultation with compliance experts when there is uncertainty or potential risk. An incorrect approach that focuses solely on immediate operational improvements without considering regulatory implications is professionally unacceptable. This failure stems from a disregard for the legal and ethical obligations of the company and the individual. Such an approach risks significant penalties, reputational damage, and potential operational disruption if non-compliant practices are discovered. Another incorrect approach that involves making assumptions about regulatory requirements without verification is equally flawed. This demonstrates a lack of due diligence and an abdication of responsibility to ensure accurate understanding and adherence to the law. Relying on past practices or informal advice without formal confirmation from the compliance function can lead to the perpetuation of non-compliant activities. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the operational objective. Second, identify any potential regulatory touchpoints or risks associated with achieving that objective. Third, proactively engage with the compliance department or legal counsel to understand the specific regulatory requirements and seek their assessment of the proposed course of action. Fourth, integrate compliance considerations into the operational plan, ensuring that any implemented solution is both effective and compliant. Finally, maintain clear documentation of the decision-making process and any consultations undertaken. Question 11. The risk matrix shows a high likelihood of reputational damage for FirstGroup due to potential breaches of customer data privacy. Which of the following actions best addresses this risk in accordance with UK data protection regulations? Option A. Implementing enhanced cybersecurity measures and conducting regular data protection training for all staff, focusing on data minimization principles and clear consent protocols. Option B. Relying on existing, general IT security policies and assuming customer data is adequately protected through standard network firewalls. Option C. Reducing the collection of customer data to only the absolute minimum required for immediate service delivery, without formalizing data handling procedures. Option D. Issuing a public statement acknowledging the potential for data breaches and promising to investigate if any incidents occur. Correct answer is A. Implementing enhanced cybersecurity measures and conducting regular data protection training for all staff, focusing on data minimization principles and clear consent protocols. Explanation. This scenario presents a professional challenge because FirstGroup, as a publicly listed company operating in the transport sector, is subject to stringent regulatory oversight and public scrutiny. The risk matrix, a common tool for assessing potential threats, highlights a significant reputational risk stemming from potential breaches of data protection regulations. The challenge lies in balancing operational efficiency with the absolute imperative of safeguarding customer and employee data, particularly in light of the General Data Protection Regulation, GDPR, which imposes strict requirements on data handling and security. A failure to comply can result in substantial fines, legal action, and severe damage to FirstGroup's brand and stakeholder trust. The correct approach involves a proactive and comprehensive data governance strategy that prioritizes data minimization, robust security measures, and clear consent mechanisms, all aligned with GDPR principles. This approach is ethically sound and legally mandated. It demonstrates FirstGroup's commitment to responsible data stewardship, which is crucial for maintaining customer confidence and regulatory compliance. By embedding data protection into the core of its operations, FirstGroup mitigates the identified reputational risk and builds a foundation of trust. An incorrect approach would be to dismiss the risk matrix findings as mere administrative hurdles or to implement superficial data protection measures without a fundamental shift in operational practices. Such an approach would be ethically negligent, as it disregards the potential harm to individuals whose data is compromised. From a regulatory perspective, it would constitute a direct violation of GDPR obligations, exposing FirstGroup to significant penalties and legal repercussions. Furthermore, it would erode stakeholder trust, as customers and employees would perceive FirstGroup as untrustworthy with their personal information. Professionals at FirstGroup should employ a decision-making framework that begins with a thorough understanding of the regulatory landscape, specifically GDPR. This involves actively seeking expert advice, conducting regular risk assessments, and fostering a culture of data privacy awareness throughout the organization. When faced with a risk matrix highlighting data protection concerns, the immediate professional response should be to investigate the root causes, develop concrete mitigation strategies, and ensure these strategies are effectively implemented and monitored, rather than seeking the path of least resistance or compliance. Question 12. Governance review demonstrates that a significant number of internal control weaknesses have been identified within FirstGroup's financial reporting processes. These weaknesses, if unaddressed, could lead to material misstatements in future financial reports. What is the most appropriate immediate course of action for FirstGroup's senior management and board? Option A. Publicly announce that the governance review has identified some minor control deficiencies and that management is confident these will be resolved without impacting financial reporting. Option B. Immediately suspend all financial reporting until all identified control weaknesses have been fully rectified, regardless of the impact on regulatory deadlines. Option C. Initiate a comprehensive internal audit and remediation plan, engaging external auditors for independent verification, and prepare for timely disclosure of the findings and remediation strategy to the market in accordance with regulatory requirements. Option D. Instruct the internal audit team to focus only on the most critical identified weaknesses, deferring less significant issues to a later date to minimize immediate disruption. The correct answer is C. Initiate a comprehensive internal audit and remediation plan, engaging external auditors for independent verification, and prepare for timely disclosure of the findings and remediation strategy to the market in accordance with regulatory requirements. Explanation. This scenario presents a professional challenge because FirstGroup, as a publicly listed company, operates under stringent regulatory oversight. The challenge lies in balancing the need for timely and accurate financial reporting with the potential for misinterpretation or selective disclosure of sensitive information. A governance review highlighting potential issues requires immediate and careful consideration to maintain stakeholder trust and regulatory compliance. The correct approach involves a thorough, documented investigation into the identified governance concerns, engaging relevant internal and external experts, and ensuring that any disclosures are made in accordance with applicable UK regulations, such as the UK Corporate Governance Code and Listing Rules and CISI Professional Ethics. This approach prioritizes transparency, accountability, and adherence to legal and ethical standards, thereby safeguarding FirstGroup's reputation and its obligations to shareholders and the market. An incorrect approach that involves downplaying or ignoring the governance review findings would be a significant regulatory and ethical failure. This would violate the principles of good governance, potentially mislead stakeholders, and expose FirstGroup to penalties for noncompliance with disclosure requirements. Another incorrect approach, such as immediately making broad, unsubstantiated public statements without a proper investigation, could lead to market speculation, damage share price, and create further regulatory scrutiny. This demonstrates a lack of due diligence and a failure to manage information responsibly. Professionals should employ a structured decision-making process that begins with a clear understanding of the identified issue, followed by an assessment of the potential impact and regulatory implications. This involves consulting relevant policies, seeking expert advice, and developing a communication strategy that is both compliant and transparent. The process should be documented at each stage to ensure accountability and provide a clear audit trail. Question 13. Operational review demonstrates that a significant number of FirstGroup's regional divisions are experiencing unexpected cost overruns that could impact the company's interim financial results. Management is under pressure to meet analyst expectations for profit growth. Which of the following approaches best aligns with regulatory requirements and professional ethics for FirstGroup? Option A. Reclassify some of the cost overruns as extraordinary items to isolate them from core operating performance and minimize their negative impact on reported profits. Option B. Focus the interim report solely on the positive financial performance of divisions that met or exceeded targets, omitting any detailed mention of the divisions experiencing cost overruns. Option C. Delay the recognition of certain accrued expenses related to these overruns until the next reporting period to present a more favorable profit figure for the current interim period. Option D. Proactively disclose the potential impact of these cost overruns in the interim financial report, providing a transparent explanation of the factors contributing to them and their estimated effect on profitability, while also outlining mitigation strategies. The correct answer is D. Proactively disclose the potential impact of these cost overruns in the interim financial report, providing a transparent explanation of the factors contributing to them and their estimated effect on profitability, while also outlining mitigation strategies. Explanation. This scenario presents a professional challenge for FirstGroup's management due to the inherent conflict between operational efficiency and the regulatory obligation to maintain accurate and timely financial reporting. The pressure to meet targets can create an environment where the temptation to manipulate or delay reporting arises, which directly contravenes the principles of transparency and accountability expected by regulatory bodies. Careful judgment is required to ensure that all financial disclosures are compliant and reflect the true financial position of the company. The correct approach involves a commitment to adhering strictly to the reporting timelines and accuracy standards mandated by the relevant regulatory framework, which for FirstGroup would be the UK's Financial Conduct Authority, FCA, listing rules and the Companies Act 2006, alongside accounting standards like IFRS. This approach prioritizes regulatory compliance and ethical financial stewardship over short-term performance pressures. It ensures that stakeholders, including investors and the public, receive reliable information, thereby maintaining market confidence and avoiding potential penalties or reputational damage. An incorrect approach that prioritizes meeting targets by selectively reporting positive outcomes while omitting or delaying the disclosure of negative ones is a direct violation of the FCA's disclosure guidance and transparency rules. These rules mandate timely and accurate disclosure of all material information that could affect share price. Similarly, delaying the recognition of potential liabilities or impairments to present a more favorable financial picture would breach accounting standards IFRS, and potentially the Companies Act 2006, which requires financial statements to give a true and fair view. Another incorrect approach, that of seeking to reclassify expenses to artificially boost reported profits, would constitute accounting misstatement, violating both accounting standards and potentially the Fraud Act 2006 if done with intent to deceive. Professionals in such situations should employ a decision-making framework that begins with a clear understanding of all applicable regulatory requirements and ethical codes. They should then assess the potential impact of any proposed action on the accuracy and completeness of financial reporting. If a conflict arises between operational pressures and regulatory obligations, the professional duty is to uphold the latter. This involves seeking clarification from legal or compliance departments, escalating concerns through appropriate internal channels, and refusing to engage in any practice that compromises financial integrity. The ultimate goal is to ensure that all reporting is not only compliant, but also ethically sound, fostering trust and long-term sustainability for FirstGroup. Question 14. Stakeholder feedback indicates that during a recent significant service disruption affecting FirstGroup's bus operations in a major urban area, Some frontline staff felt pressured to downplay the severity of the incident in their initial reports to management, prioritizing the immediate resumption of services over comprehensive and timely reporting to regulatory bodies. Considering the UK regulatory framework for public transport operations, which approach best reflects professional and compliant conduct for FirstGroup employees in such a situation. Option A. Immediately escalate the incident to FirstGroup's designated incident response team and ensure all required information is accurately documented and submitted to the relevant UK transport regulatory authorities as per established protocols, while simultaneously working to restore service. Option B. Provide a preliminary report to management that highlights the successful resolution of the disruption and omits details about the initial severity or causes, assuming regulatory bodies will be satisfied with the operational recovery. Option C. Focus solely on restoring service as quickly as possible and only provide a brief, informal update to management once operations have normalized, deferring any formal reporting to regulatory bodies until a later date. Option D. Attempt to resolve the operational issue internally and informally without informing FirstGroup management or any regulatory bodies, believing that a swift, unannounced resolution is the most efficient outcome. The correct answer is A. Immediately escalate the incident to FirstGroup's designated incident response team and ensure all required information is accurately documented and submitted to the relevant UK transport regulatory authorities as per established protocols, while simultaneously working to restore service. Explanation. This scenario presents a professional challenge for FirstGroup employees due to the inherent tension between responding to immediate operational pressures and adhering to established regulatory reporting requirements. The need for swift decision-making in a dynamic environment, such as a service disruption, can tempt individuals to bypass or delay formal reporting procedures. However, maintaining public trust and ensuring regulatory compliance are paramount, especially in a sector like public transportation, where safety and service reliability are critical. Careful judgment is required to balance operational expediency with the non-negotiable duty to report accurately and promptly. The correct approach involves prioritizing the immediate safety and well-being of passengers and staff, followed by a prompt and accurate internal reporting of the incident to the relevant FirstGroup management, and if necessary, to the appropriate regulatory bodies as per the established protocols. This aligns with the principles of good corporate governance and regulatory compliance, which mandate transparency and accountability. Specifically, adherence to the regulatory framework governing transport operations in the UK, which likely includes requirements from the Department for Transport, DFT, and the Office of Rail and Road for rail services, or equivalent bodies for bus services, would necessitate timely incident reporting. This ensures that regulatory bodies are informed, can assess the situation, and can take any necessary actions to prevent recurrence or mitigate risks. Ethical considerations also demand that stakeholders, including passengers and the public, are kept informed through appropriate channels, which is facilitated by accurate internal and external reporting. An incorrect approach would be to delay or omit reporting the incident entirely, perhaps due to a desire to avoid scrutiny, or because the immediate operational impact seems minor. This failure to report breaches regulatory obligations, potentially leading to penalties and a loss of confidence from regulatory authorities. It also undermines the company's ability to learn from incidents and improve its services. Another incorrect approach would be to provide an incomplete or misleading report, focusing only on aspects that cast the company in a favorable light while omitting critical details. This constitutes a breach of ethical conduct and regulatory requirements for truthful reporting, potentially leading to severe consequences if discovered. Finally, an approach that prioritizes internal damage control over regulatory compliance, such as attempting to resolve the issue without informing the necessary authorities, is also professionally unacceptable and carries significant regulatory and reputational risks. Professionals should employ a decision-making framework that begins with an immediate assessment of safety and operational integrity. This should be followed by a clear understanding of FirstGroup's internal incident reporting policy and the relevant UK regulatory reporting obligations. When in doubt, erring on the side of over-reporting and seeking clarification from supervisors or compliance departments is always the safer and more professional course of action. The framework should emphasize proactive communication and transparency, ensuring that all relevant parties are informed in a timely and accurate manner. Question 15. Upon reviewing preliminary financial performance data for FirstGroup that indicates a significant, unexpected improvement in a specific division, but before the official reporting period has closed, what is the most appropriate course of action to ensure compliance with market regulations? Option A. Delay any communication regarding the performance data until the official reporting period has concluded and the full financial statements are prepared. Option B. Proceed with the announcement of the positive performance to key stakeholders, assuming it will be viewed favorably and will be officially reported later. Option C. Share the preliminary performance data with a select group of trusted investors to give them an early indication of the positive trend. Option D. Immediately consult with FirstGroup's legal and compliance departments to assess the materiality of the information and determine the appropriate disclosure timing and method. The correct answer is D. Immediately consult with FirstGroup's legal and compliance departments to assess the materiality of the information and determine the appropriate disclosure timing and method. Explanation. This scenario is professionally challenging because it requires an individual at FirstGroup to navigate potential conflicts of interest and ensure compliance with regulatory obligations, specifically concerning the disclosure of information and the integrity of financial reporting. The pressure to present a positive outlook to stakeholders, while simultaneously adhering to strict disclosure rules, demands careful judgment and a commitment to ethical conduct. The correct approach involves proactively seeking clarification from the legal and compliance departments regarding the specific disclosure requirements for material non-public information. This is the most appropriate professional practice because it directly addresses the regulatory framework governing public companies, such as the UK Financial Conduct Authority, FCA rules, and the Market Abuse Regulation, MAR. These regulations mandate timely and accurate disclosure of inside information to prevent market abuse and ensure a level playing field for all investors. By consulting with internal experts, the individual demonstrates a commitment to compliance and avoids making potentially erroneous judgments about disclosure obligations. An incorrect approach would be to proceed with the announcement without seeking further guidance, assuming the information is not material enough for disclosure. This fails to meet the regulatory standard for identifying and disclosing inside information, potentially leading to market abuse and significant penalties for FirstGroup. Another incorrect approach would be to selectively disclose the information to a limited group of stakeholders before a public announcement. This constitutes selective disclosure, a serious breach of market abuse regulations, and undermines the principle of equal access to information for all investors. Finally, delaying the announcement indefinitely while internal discussions continue, without any formal assessment of materiality or consultation with compliance, also poses a risk. While internal discussions are necessary, a lack of timely action or assessment can still lead to a breach if the information is indeed material and should have been disclosed earlier. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves understanding the relevant legal and regulatory landscape, identifying potential conflicts or ambiguities, seeking expert advice when necessary, and documenting all decisions and actions taken. In situations involving potential inside information, the default should be to err on the side of caution and consult with the appropriate internal departments before making any public statements or disclosures. Question 16. Cost-benefit analysis shows that implementing a new, advanced passenger safety monitoring system for FirstGroup's bus fleet would incur substantial upfront capital expenditure and ongoing maintenance costs. However, internal risk assessments indicate a significant potential reduction in passenger injury incidents and associated liabilities. Which approach best balances regulatory compliance, operational efficiency, and stakeholder interests for FirstGroup? Option A. Negotiate with the system vendor for a phased payment plan to spread the capital expenditure over several years, without a full assessment of the system's long-term safety benefits. Option B. Defer the implementation of the new safety monitoring system until a more cost-effective solution becomes available, focusing on existing safety protocols to manage immediate operational costs. Option C. Implement a limited version of the new safety monitoring system on a pilot basis in a few select routes to gauge its effectiveness and cost before a full rollout. Option D. Implement the new safety monitoring system, recognizing that the long-term benefits of enhanced safety reduced liability, and improved public trust outweigh the initial financial outlay, aligning with regulatory expectations for proactive risk management. The correct answer is D. Implement the new safety monitoring system, recognizing that the long-term benefits of enhanced safety, reduced liability, and improved public trust outweigh the initial financial outlay, aligning with regulatory expectations for proactive risk management. Explanation: this scenario is professionally challenging because FirstGroup, as a publicly traded company operating in the transportation sector, must balance the financial implications of operational decisions with its regulatory obligations and ethical responsibilities to stakeholders, including passengers, employees, and shareholders. The decision to implement a new safety protocol, while potentially costly, directly impacts public safety and the company's reputation, necessitating a careful evaluation that goes beyond immediate financial returns. The correct approach involves prioritizing regulatory compliance and passenger safety above short-term cost savings. This means thoroughly assessing the new safety protocol's effectiveness in mitigating identified risks, understanding its full implementation costs, and then determining if the benefits, reduced accident risk, enhanced passenger confidence, avoidance of potential fines or litigation, outweigh the costs, even if the initial outlay is significant. This aligns with the principles of responsible corporate governance and adherence to transport safety regulation, which often mandate proactive risk management and investment in safety measures. The regulatory framework for transportation companies typically emphasizes a duty of care to the public, requiring that safety investments are made when reasonably practicable to prevent harm. An incorrect approach would be to dismiss the new safety protocol solely based on its upfront cost, without a comprehensive risk assessment or consideration of potential long-term liabilities. This failure to adequately invest in safety, even when a clear benefit exists in risk reduction, could lead to regulatory breaches, increased accident rates, and severe reputational damage. Another incorrect approach would be to implement the protocol in a piecemeal or superficial manner to reduce immediate expenditure, without ensuring its full effectiveness. This would not only fail to achieve the intended safety improvements, but could also be seen as a deliberate attempt to circumvent regulatory requirements or mislead stakeholders about the company's commitment to safety. Professionals should employ a decision-making framework that integrates regulatory requirements, risk management principles, and ethical considerations. This involves 1. Identifying all relevant regulations and standards pertaining to safety in the transportation sector. 2. Conducting a thorough risk assessment to understand potential hazards and the effectiveness of proposed mitigation measures. 3. Performing a comprehensive cost-benefit analysis that includes not only direct financial costs, but also potential costs of inaction, e.g., fines, legal fees, reputational damage, loss of public trust. 4. Evaluating the ethical implications of each decision, particularly concerning the safety and well-being of passengers and employees. 5. Documenting the decision-making process and the rationale behind the chosen course of action. Question 17. The control framework reveals that FirstGroup's finance department is reviewing its year-end financial statements, and there is pressure to present a strong performance despite ongoing restructuring. A senior manager suggests reclassifying certain operational expenses as exceptional items to improve reported profitability, arguing this aligns with industry practice for similar companies. Another suggestion is to defer the recognition of certain accruals related to the restructuring until the following financial year to reduce current liabilities, which approach best upholds FirstGroup's regulatory and ethical obligations. Option A. Reclassify operational expenses as exceptional items to align with perceived industry practice, but recognize all restructuring accruals in the current year. Option B. Conduct a thorough review of all expenses and accruals, ensuring their classification and recognition strictly adhere to UK GAAP/IFRS and relevant disclosure requirements, regardless of the impact on reported profitability. Option C. Defer the recognition of restructuring accruals to the following financial year, but ensure all operational expenses are correctly classified according to UK GAAP/IFRS. Option D. Reclassify operational expenses as exceptional items and defer recognition of restructuring accruals to present a more favorable financial picture. The correct answer is D. Reclassify operational expenses as exceptional items and defer recognition of restructuring accruals to present a more favorable financial picture. Explanation: this scenario presents a professional challenge due to the inherent conflict between operational efficiency and the strict adherence to regulatory requirements for financial reporting and disclosure. FirstGroup, as a publicly listed company, is subject to stringent rules designed to ensure transparency and protect investors. The pressure to present a favorable financial picture, especially during a period of potential restructuring, can create an environment where shortcuts or selective reporting might be tempting. However, the regulatory framework, particularly concerning accounting standards and disclosure obligations, demands accuracy and completeness. Careful judgment is required to navigate these pressures, while upholding professional integrity and legal compliance. The correct approach involves a thorough and objective assessment of all relevant financial data, ensuring that any adjustments or reclassifications are fully compliant with the applicable accounting standards and are supported by robust documentation. This includes proactively identifying and addressing any potential misstatements or areas of uncertainty, and ensuring that all disclosures are accurate, complete, and presented in a manner that is not misleading. This approach is justified by the fundamental principles of financial reporting, which prioritize truthfulness and transparency. Specifically, adherence to UK Generally Accepted Accounting Practice, UK GAAP, or International Financial Reporting Standards, IFRS, depending on FirstGroup's reporting requirements, is paramount. The Companies Act 2006 also mandates accurate accounting records and the preparation of true and fair financial statements. Ethical considerations, such as the duty of care and professional skepticism expected of finance professionals, further reinforce the need for an uncompromised approach to financial reporting. An incorrect approach that involves selectively applying accounting standards to achieve a desired outcome would represent a failure to comply with the core principles of UK GAAP/IFRS. This could lead to misstated financial statements, violating the Companies Act 2006 and potentially misleading investors. Another incorrect approach, such as omitting disclosures about significant contingent liabilities or restructuring costs, would be a direct breach of disclosure requirements, undermining transparency and investor confidence. This also contravenes the listing rules of the Financial Conduct Authority, FCA, if FirstGroup is listed on the London Stock Exchange, which mandates timely and accurate disclosure of material information. Furthermore, such actions could be construed as fraudulent or misleading, with severe legal and reputational consequences. The professional decision-making process in such situations should involve a commitment to professional skepticism, questioning assumptions and seeking corroborating evidence. It requires a clear understanding of the relevant regulatory framework and accounting standards. When faced with conflicting pressures or uncertainties, professionals should consult with senior management, internal audit, or external auditors. Escalation of issues that cannot be resolved at a lower level is crucial to ensure that the correct, compliant course of action is taken. Maintaining detailed and accurate records of all decisions and justifications is also a key element of professional practice. Question 18. Examination of the data shows that FirstGroup is considering a new partnership that could significantly expand its service offerings in a specific region. However, preliminary information suggests this partnership might involve entities that have previously faced scrutiny for their adherence to public transport regulations. What is the most appropriate course of action for a FirstGroup employee tasked with evaluating this opportunity? Option A. Conduct a comprehensive due diligence process, thoroughly investigating the regulatory history and current compliance status of all potential partners, and consult FirstGroup's legal and compliance departments before proceeding. Option B. Immediately halt discussions and reject the partnership due to the potential for past regulatory issues with associated entities. Option C. Rely on the reputation of the potential partners and assume they are compliant with all relevant regulations, proceeding with the partnership based on this assumption. Option D. Proceed with the partnership if the potential financial benefits are substantial, assuming regulatory compliance will be addressed later. The correct answer is D. Proceed with the partnership if the potential financial benefits are substantial, assuming regulatory compliance will be addressed later. Explanation: This scenario presents a professional challenge for a FirstGroup employee due to the inherent conflict between a potential business opportunity and the company's regulatory obligations. The need for careful judgment arises from the requirement to act in the best interests of FirstGroup, while adhering strictly to the regulatory framework governing its operations. Misinterpreting or disregarding these regulations could lead to significant legal penalties, reputational damage, and loss of trust from stakeholders. The correct approach involves a thorough understanding and application of the relevant regulatory framework, specifically focusing on the principles of transparency, fairness, and compliance in all business dealings. This approach prioritizes adherence to established rules and guidelines, ensuring that any decision made is legally sound and ethically defensible. By consulting internal policies and seeking clarification from the appropriate regulatory bodies or legal counsel, an employee demonstrates a commitment to responsible corporate conduct and risk mitigation, which is paramount in the highly regulated transport sector. An incorrect approach that prioritizes immediate financial gain without due diligence fails to acknowledge the potential regulatory pitfalls. This could lead to breaches of contract, anti-competitive practices, or violations of data protection laws, depending on the specifics of the opportunity. Another incorrect approach, which involves making assumptions about regulatory compliance without verification, is equally problematic. Such assumptions can result in unintentional noncompliance, exposing FirstGroup to sanctions. A third incorrect approach, which involves delaying action due to uncertainty without seeking guidance, can lead to missed opportunities or, conversely, to a situation where a decision is made under pressure without adequate consideration of regulatory implications. All these incorrect approaches demonstrate a lack of professional diligence and a disregard for the critical importance of regulatory adherence in the operational context of FirstGroup. Professionals in this situation should employ a decision-making framework that begins with identifying the core issue and its potential regulatory implications. This should be followed by a comprehensive review of all applicable regulations and internal company policies. Seeking expert advice from legal or compliance departments is crucial. Documenting the decision-making process, including the rationale and any consultations undertaken, provides a clear audit trail and reinforces accountability. Question 19. Assessment of how a FirstGroup employee should manage a situation where a close family member is a senior manager at a key potential supplier company, and the employee is part of the team responsible for evaluating bids for a significant contract that could greatly benefit the supplier. Option A. Proceed with the evaluation as normal, assuming personal objectivity can be maintained, and not disclose the relationship to avoid potential awkwardness. Option B. Subtly steer the evaluation towards the family member's company by highlighting their strengths and downplaying potential weaknesses during internal discussions. Option C. Inform colleagues about the family connection but continue to participate in the evaluation, arguing that their input is valuable due to their understanding of the supplier's capabilities. Option D. Disclose the personal relationship to the appropriate FirstGroup management and recuse oneself from all aspects of the bid evaluation process for that supplier. Correct answer is D. Disclose the personal relationship to the appropriate FirstGroup management and recuse oneself from all aspects of the bid evaluation process for that supplier. Explanation. This scenario presents a professional challenge for a FirstGroup employee due to the inherent conflict between a personal relationship and the company's duty to maintain objective and fair dealings with its suppliers. The need for careful judgment arises from the potential for perceived or actual bias, which could undermine trust, damage supplier relationships, and potentially lead to regulatory scrutiny or internal policy violations. The correct approach involves transparently disclosing the personal relationship to the relevant internal authority at FirstGroup and recusing oneself from any decision-making processes related to the supplier. This upholds professional integrity by prioritizing the company's interests and adhering to principles of fairness and impartiality. Specifically, this aligns with general principles of good corporate governance and ethical conduct expected of employees in regulated industries, which often mandate disclosure of conflicts of interest to prevent undue influence and ensure objective decision-making. While specific FirstGroup policies would govern the exact procedure, the underlying ethical and governance principles are universally recognized. An incorrect approach of proceeding with the supplier evaluation without disclosure fails to address the conflict of interest. This creates a significant risk of actual or perceived bias, potentially violating internal FirstGroup policies on conflicts of interest and ethical conduct. It also erodes trust with other suppliers who may believe the process is not fair. Another incorrect approach of subtly favoring the known supplier, even without explicit disclosure, is ethically reprehensible and a direct violation of principles of fair competition and integrity. This constitutes a breach of fiduciary duty to FirstGroup and could lead to severe disciplinary action, including termination and potential reputational damage to the company. A further incorrect approach of attempting to influence colleagues to favor the supplier, even if the employee recusses themselves from the final decision, is also unacceptable. This circumvents the spirit of recusal and still introduces bias into the process, undermining the integrity of FirstGroup's procurement procedures and potentially violating ethical standards. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This involves proactively considering personal relationships and their potential impact on professional duties. Upon identification, the next step is to consult internal policies and seek guidance from management or the compliance department regarding disclosure and recusal procedures. Transparency and adherence to established protocols are paramount to maintaining professional integrity and safeguarding the company's interests. Question 20. Which approach would be most appropriate for a FirstGroup driver to take when a passenger reports a concerning, but not immediately obvious mechanical noise emanating from the bus engine during a scheduled route? Option A. Immediately pull over to a safe location, cease the service, and contact the depot for a qualified technician to inspect the vehicle before continuing the journey. Option B. Inform the passenger that such noises are common and not a cause for concern, then continue the route. Option C. Continue the route as scheduled, making a note to report the noise at the end of the shift for later inspection. Option D. Ask the passenger to describe the noise in more detail, and then continue the route if the passenger's description does not sound immediately critical. The correct answer is C. Continue the route as scheduled, making a note to report the noise at the end of the shift for later inspection. Explanation. This scenario presents a professional challenge for a FirstGroup employee due to the inherent conflict between maintaining operational efficiency and adhering to the strict regulatory framework governing public transport safety. The need to balance immediate service delivery with long-term compliance requires careful judgment. The correct approach involves prioritizing the immediate safety concern by halting the service and initiating a thorough inspection, even if it causes temporary disruption. This aligns with the absolute priority placed on passenger safety within the regulatory framework. Specifically, it upholds the duty of care owed to passengers and the legal obligations under relevant transport safety legislation, which mandates that any doubt regarding the safety of a vehicle or its operation must result in immediate cessation of service until the issue is resolved. This proactive stance prevents potential accidents, protects the company from severe penalties, and maintains public trust. An incorrect approach that prioritizes minimizing immediate disruption by continuing service with a minor reported issue would fail to meet the absolute priority requirement for safety. This would constitute a breach of regulatory duty and ethical responsibility, potentially leading to severe consequences including accidents, injury, fatalities, significant fines, and reputational damage for FirstGroup. Another incorrect approach, which involves deferring the inspection to a later scheduled maintenance slot without assessing the immediate risk, also fails to uphold the absolute priority of safety. This demonstrates a disregard for the potential for a minor issue to escalate into a critical safety failure, thereby violating the spirit and letter of safety regulations. A further incorrect approach, which might involve a superficial check by the driver without a formal, qualified inspection, would be insufficient to satisfy the regulatory requirement for a thorough safety assessment. This approach risks overlooking a genuine safety defect, thereby compromising passenger well-being and exposing FirstGroup to regulatory sanctions. Professionals should employ a decision-making framework that begins with identifying potential risks to passenger safety. This involves understanding the severity and immediacy of any reported issue. The framework then requires consulting the relevant regulatory guidelines and company policies to determine the mandatory actions. In cases of doubt or potential safety compromise, the default action must always be to err on the side of caution, prioritizing safety over operational convenience, and initiating appropriate inspection and remedial procedures as dictated by the regulatory framework.